Every single time you open your chart, I'm sure you see a lot of price action with price going up, with price coming down. And sometimes you may just think that price is giving you the opportunity to buy low or giving you the opportunity to sell high, right? But what you don't know is that most of the time, some of these pullback or retracements are because of the Fibonacci retracement level. All those pullback, all those corrections, all those moves that you see on an impulsive move correction are most of the time because of the Fibonacci retracement level. So in this video, you're going to learn every single thing you need to know about the Fibonacci retracement level. And even though I would love to give you the history behind this wonderful tool, we really don't need a history as Forex traders. What we really need is how to use this retracement tool on the Forex market. But the Fibonacci can be found in nature, it can be found in the universe, it can be found even on the human body. From your hand here to your nose here, you can find the Fibonacci retracement levels. So then if you really want to know more about these Fibonacci retracement levels, who invented it and what it means, then I would advise that you go on Google and then read everything you need to know about Fibonacci retracement level. But then in this video, you're going to learn how to use the Fibonacci tool to correctly find our retracement zones on the chart and to make thousands or millions of money from the Forex market. So if you think this topic is something that you'll be very much interested in and is going to help you as a Forex trader, then stick with me to the end of this video, because I'll be going straight into the chart to show you how to correctly use these tools and how to catch millions and thousands and hundreds of pips in this market. Once again, YouTube has sent me a feedback that 77% of people who watch this channel haven't hit that subscribe button yet. So please do all and let's reduce this number, and I'll be very much grateful if you guys support this channel. Let's get into the charts now. When it comes to Fibonacci retracement, we use it as a retracement tool to identify potential reversal points in the market or points of support and resistance in the market. For example, when market is selling and you're using the Fibonacci tool, it helps you to identify where market could possibly retrace to for the next lower high to be created so that you can also sell from. And when market is buying, it also shows you where market could possibly retrace to for a higher low or for a new support level for potential buys to come into the market. So I hope you understand. It's simply used to identify retracement areas in the market. And when it comes to Fibonacci retracement on TradingView, we can find the tool on the left side here, okay? You can see we have some tools here. You click on this drop down and then you have it as the first one, Fib retracement. Make sure you select this because we have some Fib circle, Fib spiral. I never use any of this, so just select Fib retracement only. If you like, you can just click on the favorite to add it to your favorite tool so that whenever you want it, it will just pop up on your chart for you. So just click on the Fib retracement on the left side here. Just click on it. Just put your cursor at anywhere on the chart. When you click it, you have this appearing on your chart. Okay, you can drag it anywhere, but you have this appearing on your chart. Now with mine, I've applied certain settings to it. So if you want to use my Fib settings, let me just go to settings, and these are my Fib settings. So you can just screenshot this and also have the same settings as if you want to have the same Fibonacci settings, right? From the TradingView settings. Okay, now TradingView comes with some default settings for the Fibonacci, right? So if you want to use my settings, just screenshot it and then use the same settings for your Fibonacci tool also. Not to say the TradingView settings is bad, but this is, at least it's neat and it's clearer, you understand? And when you look on the Fibonacci tool, you can see we have some numbers here, right? We have 1, we have 0.786, which is also 78.6. We have 61.8, we have the 50%, we have the 0%, we have the 38.2, we have the 23.6, and a lot of settings that you can actually use for Fibonacci. But then when I'm trading Fibonacci, these are the ones that I concentrate on. These are the ratios that I use when I'm trading Fibonacci. I hope you understand. Now, if you want to use the Fibonacci tool correctly, it's better to use it in a trending market. When I say a trending market, either an uptrend market or a downtrend market. So if market is giving you a series of higher highs and higher lows, the Fibonacci tool can help you know where market could potentially retrace to for a new higher low so that you can join the trade to the upside. When market is in a downtrend where you have series of lower highs and lower lows, lower highs and lower lows, the Fibonacci tool can also help you know where market could possibly create another lower high point so that you could enter the trade for a sale. I hope everything is very clear at this point, right? So now let me just draw an uptrend market here. Let me show you how to use the Fibonacci tool on it. So we have a higher high, higher low, we have a higher high here, we have a higher low here, we have a higher high here. Okay, so let's assume that this is what we saw on our chart. This is a structure we are seeing on our chart. We have a higher high here, we also have another higher high here. Then currently market has created a new high, right? So we have a new high here. Let's have the swing lows as our higher low. So we have a higher low here. So we have a higher low here. Let's indicate here as our higher low point. So we have one higher low here, we have another higher low here, and then currently we are looking for market retracing to give us a new higher low, then another push up, right? Ideally, that's what market will be doing if it's giving you this particular structure. But then let's see how we can use the Fibonacci retracement tool to find where market could potentially retrace to, so we can get some sniper entry or maybe at a support level here to push up. I hope you understand. Okay, now let's do for a downtrend market. So in a downtrend market, you have series of lower highs, you have lower lows, you have lower highs, you have lower lows. So market breaks this low, you'll be expecting the market to pull back to give you a new lower high to form to go to the downside, right? This is where Fibonacci comes in. It helps you know where market could potentially retrace to so that you could take your entry from that point and also break this recent low here. I hope that makes sense. Okay, so let me just show you how to use the Fibonacci tool in an uptrend market and in a downtrend market. So if you want to use the Fibonacci tool in an uptrend market, you always have to focus on the most recent low that has formed, because if market is giving you a series of higher highs, higher lows, higher highs, higher lows, you're expecting a new low, right? A new higher low to the upside. So then you focus on the most recent higher low that has already been formed, the most recent one. When you look on the chart, the most recent one we can see is this higher low here. Let me just indicate it. We can see this higher low here. So now if you're looking at finding the retracement zone for this move right here, we put our Fibonacci tool on the recent higher low to the recent higher high. Always remember the recent higher low to the recent higher high in an uptrend. Okay, so the recent higher low, which is down here, you pull it up to the recent higher high, and then the zones that you need to focus on for possible retracement is the 0.5 and also the 61.8, right? These two zones you need to focus on them, either this line, the 0.5, or the 0.618. So the best thing to do is to take a rectangle tool and then just mark that zone down. Just mark it down like this, okay? And you just delete this and you have the zone that you're looking at trading from. So meaning that this zone that you have marked there could possibly be a buy zone, right? Or a retracement zone for a new higher high to be formed. So let's just make it possible buy zone. So ideally, we'd expecting that if market comes back to this zone, we'd have something like this. Market coming back, retesting this zone, and then pushing all the way to the upside. This is what we'd be expecting. Same thing if you want to find where market could potentially retrace from this high here. Just take your Fibonacci 2, because you'd be expecting something like this to the upside again, right? And best thing, come back, take your Fibonacci 2 from the recent swing low here to the recent high here. Okay, then you just take your rectangle tool, just mark your zone down, then you delete the Fibonacci tool. Now this is how to simply trade Fibonacci in an uptrend. Same thing if you're in a downtrend market where you're having lower highs and lower lows, lower highs and lower lows. And if you want to find out the next lower high that market could potentially create, which is something like this, then a new move to the downside, you can use the Fibonacci tool for this. Now also note that when you're trading in the downtrend market, you use the Fibonacci tool, use it from the most recent high to the most recent low. The difference is that in an uptrend is from the most recent low to the most recent high. In a downtrend, it's from the most recent high to the most recent low. Please keep that in mind. So you take a Fibonacci tool from this high point here, because this is our recent high, or the last high that was formed in the market. You put your Fibonacci tool there, then you spread it to the low that we have here. Okay, once you spread it, you come back, take your rectangle tool, and then mark your Fibonacci zone down, which is this. Now once you're done with this, you just delete your Fibonacci tool, and then you wait for market to retrace to your zone. You get your candlestick confirmations there, then you enter the trade to the downside. I hope this makes sense. Okay, now just know that when price gets to this Fibonacci zone, they just act as support or resistance zones for retracement to come into the market. Okay, it's ideally for support or resistance zones in the market. Okay, so just keep that in mind. And when you have price coming to your Fibonacci zones, just wait for maybe weak rejections, wait for proper candlestick confirmation before you decide to enter the trade. Just wait for a proper candlestick confirmation. It's in a downtrend, maybe you can look for a tweezer top, you can look for an evening star, you can look for a shooting star, you can look for any bearish candlestick confirmation which confirms to you per your entry criteria that market will go down. Same thing if you are looking for it in an uptrend, you make sure that you have your candlestick confirmations such as a morning star, such as a tweezer bottom, or a gravestone doji to move to the upside. So make sure you have your candlestick confirmations that suit well with you before you try to enter any trade upon the retracement. And just keep in mind that the Fibonacci tool is not a strategy on its own. It's a tool for confluence or for an extra confirmation when you have a proper trade setup. So let's say you have a trend line and you have your Fibonacci zone also meeting with your trend line, that gives you extra confirmation. If you have your Fibonacci tool meeting with your bank level, that also makes it a stronger zone or a stronger confirmation for you to take that particular trade. So just use it as extra confirmation in your zones. So if you have your setup down already, you can just pull the Fibonacci tool to find possible retracement and see if they match with the zones that you have already drawn. Once you find that, it's going to also build some confidence in you that this trade will definitely go into your direction. So please know that you can't use it as a standalone tool on its own. Make sure you have some confluences backing this before you decide to enter a trade. I hope that makes sense. But then let's try how some of these Fibonacci zones also act on the chart. Okay, let's move to the real chart. Now this is gold on the 30 minutes time frame, and when we look at gold, we can see gold is very bullish here, right? We have higher highs, we have higher lows, we have higher highs here, we have higher lows, higher highs, higher lows, we have higher highs here, higher lows. We've created new highs here, and currently we're expecting this bullish structure to continue, right? So now let's look for where we could possibly enter for retracement, right? Let's see if we break and create new highs, then we'll look for the most recent low to enter for retracement, just like I taught you when we started. Okay, so let's see what market does. So we have market giving us new highs here. Okay, we've broken this structure here. We have new highs forming from this level. So we've broken structure here. Now the most recent low that we can see is this higher low here. So this was the last higher high we had here, a higher high. And then the most recent low that we can see is the structure we have here. So now since price has broken this zone, we'd have to see if price will start retracing for another push up to the upside. So let's see if we create a new high or we just come down for a retracement to the upside. Let's see what market does. So we have a new high also formed here. And now let's see if price makes any attempt to retrace into any of the zones here. So we have bearish pressure coming into the market right now. At this point, you can see that market may possibly react because we have some bearish pressure coming into the market. We can see the bears coming into the market with this candle. Okay, so just take your Fibonacci tool from this point, take your most recent low, which is this higher low here, then pull it to the most recent high, which is this higher high, new higher high we formed here. Then you take a rectangle tool and then you draw the fib zone or the golden zone. Then you just delete this and then you are good to go, right? So this becomes a possible retracement zone where market could possibly do something like this, come back into this zone, then push up to the upside. Okay, now let's see what market does. So market comes all the way down. Let's see if we are tapped into our Fibonacci zone. Then suddenly price touches our Fibonacci zone. At this point, we are tagged into the trade. So we are here, we are risking about, let's say 40 pips because it's gold, 40 pips. And then we are targeting about 120 pips, which is like a 1:3 risk to reward ratio, right? So we are targeting 120 pips and let's see if price just gets there. And just like that, we've smashed our TP 1:3 risk to reward using a simple retracement tool, which is a Fibonacci tool, to find possible entries or pullback entries to make the most profit when we have the opportunity. Okay, now we've created a new high here. Let's see what happens. Now let me just remove this so we'll have a new zone for a new high to form, right? So now let's see if price makes any attempt to also start coming down here. So price makes attempt to come. Now we take our Fibonacci tool, then take it from the lowest swing low point here to the highest point here. They would have this zone as our possible buy zone. So we just take it, draw another Fibonacci zone, then you delete this fib tool. Now let's see if price taps there, another move to the upside. So price taps in our Fibonacci zone again, and then we have a new. So you see how easy it is to use this. First retracement, we shot up, price didn't come back to entry. Second retracement, price shot up and also gave us about how many pips? Let's say right from here we have about 250 pips. This is a very easy setup and you can also do it. You don't need anyone to teach you this. You can also sit down and then do some of these setups on your own as a Forex trader. I'll be very happy if you could do this because it's very simple and you can do it anytime and anywhere on any time frame that you are on. So now let's take another example with the downtrend market, so we know how to use the Fibonacci also in a downtrend market. Okay, let's move to a downtrend market. So price broke structure here, break of structure. Let's just call it BOS, which is simply break of structure, right? So you have a break of structure here. If price has broken structure, you may start having series of lower highs and lower lows because a recent higher low has been broken, right? Now let's see what price does. And there's another thing here. You can see there's a big impulsive move, right? So possibly market will correct this move because we've broken structure here. A market can possibly retrace to the upside and then come and break this structure also. I hope you understand, because we've broken a major higher low structure here. Let's see what market does. If market starts to pull up, we can take our Fibonacci tool and then get a possible retracement entry for this correction. Then we can move to the downside more. So let's see what happens. So price starts to move up, right? At this point, let's see if market moves down anymore. So at this point, you have a new low form, right? So you can take a Fibonacci tool, take it from this level here and then to the last wick here, which is this low here, and we have this zone as our Fibonacci zone. So we can just take our rectangle tool and then mark our golden zone, which is this zone right here. So this becomes our sell zone or our retracement zone after the break of structure, right? Now let's see what happens when price gets there. So you have price tapping into our sell zone right here. Simple trade, tap into our sell zone, and even at the moment we have about 70 pips, 75 pips just from using the Fibonacci zone. Very easy trade, right? Now let's see what price does. So price goes down the more, right? Now let's assume you have missed this trade and looking for a potential entry for a new lower high so that you can enter the sell trade. So let's see if we can find an entry for you. So price starts moving up, right? Immediately you can just take your Fibonacci tool, you take your most recent lower high, which is this new lower high we found here, right? And then you bring it to the downside and you can mark this zone as a Fibonacci zone, which is the 61.8 and the 0.5 or the 50%. Then you can delete this. So this becomes a new sell zone. Let's see if price taps into our zone. So price taps into our sell zone and then what do we see? Another move to the downside. So all in all, from this structure we have here to this, we have about 190 pips, right? So this is another structure on the daily time frame on gold, right? We can see see this big impulsive move that has happened. And most of the time when there are such impulsive move, market will correct itself or retrace and still go back into the same direction as the impulsive move, right? So any retracement you see back into the zone here is a possible move or a retracement for new lower highs to be formed in the market, right? We've broken a lot of major higher lows here. What we do is that we take our Fibonacci retracement tool and then identify our most recent lower high, which is this right here. So this is our most recent lower high. Let me just make it in capital letters. We have a lower high here, and then our most recent lower low which market has given us is this level right here. So let's just make here LL, which is lower low, right? Then you take a Fibonacci tool. After an impulsive move, the Fibonacci tool giving you a corrective zone, right? So let's just take our Fibonacci tool, then put it on the most recent high to the most recent low, right? And now we will draw here as our possible sell entry. So we just have price there, then we'll delete the Fibonacci tool. Now let's see what price does when it gets to our zone. So price starts to retrace, okay? Then let's see if price gets to our zone. So suddenly price enters this Fibonacci zone, right? Let's see how price plays out in this zone. So price is still in this zone and then goes all the way to the downside. You can see beautiful trade here, right? This is 2,600 pips on gold just by using simple Fibonacci tool to find a zone that you could possibly have a new lower high form so that you can move to the downside. This tool is very easy to use, and if you're having any issues, you can just reach out to me on Instagram or on Telegram at AbaTrade, and I'll be glad to elaborate more on it for you. I hope you understand. So it's very easy to use. Just make sure you have a good trend. You know where to place your Fibonacci tool from the upside to the downside, or from the downside to an upside and an uptrend. Make sure that doesn't confuse you. In a downtrend, you take it from the upside to the downside, and in an uptrend, you take it from the most recent higher low to the most recent higher high. Okay, I hope that makes sense. So this is simply how to use the Fibonacci tool, and if you keep on trying your hands on it, you're going to get very good. So I hope this video has taught you a lot to understand how to use the Fibonacci tool to also catch retracements and pullback entry, so that if you miss a trade, you can still find a possible entry to join the big move. I hope you understand. So that'll be all for today, guys. Now if you enjoyed every bit of this video, please do also hit the subscribe button right below, and also like this video so that YouTube can push it to many people who also want to learn about Forex trading. Also do want to follow me on Instagram and also on TikTok at AbaTrade, and join my free trading community where I drop free setups for you to make money on a day-to-day basis. Find the link in the description to all my social media channels and join the AbaTrade family today. That'll be all for today, guys. It's AbaTrade right here, and peace out.